Want to score better in accounting exam? First, you need to understand the language of accounting. Today, I'll teach you the most important accounting terms in the easiest way possible. By the end of this video, you'll understand the language of accounting like a pro. Let's get started. Hello everyone. Welcome to Commerce Made Easy by Jennifer. If you are a commerce student and want accounting explained in a simple and easy way, make sure to subscribe and turn on the notifications. Let's begin with the first term, business transaction. A business transaction is any activity involving money that affects the business. Example, buying furniture, selling goods, paying rent, etc. No money impact, no accounting entry. The next term is capital. Capital is the amount invested by the owner into the business. For example, if Rahul wants to start business with rupees 50,000, that 50,000 is called the capital. The next term is assets. Assets are the things that are owned by the business which have value. Examples, cash, furniture, building, machinery, etc. The next term, liabilities. Liabilities are the amounts the business owes to others. Examples, bank loan, outstanding rent, credit purchases. So, liabilities are what business has to pay. The next term is debtors. Debtors are customers who brought goods on credit and haven't paid yet. Simple trick, debtors owe money to the business. The next term, creditors. Creditors are the people from whom the business purchased goods on credit. Here, the simple trick is business owes money to the creditors. Next term is goods. In accounting, goods means the items which are brought for resale. For a mobile shop, mobiles are goods. The next term is purchases. When the goods are brought for resale, it is called purchases. The next term, sales. When the goods are sold to the customers, it is called sales. The next term is revenue. Revenue is the income earned from normal business activities. For example, sales income earned by a business. Next is expenses. Expenses are cost incurred to run the business. Examples, rent, salary, electricity, advertising, etc. Next term is profit. When revenue is greater than expenses, the business earns profit. Example, if income is rupees 10,000 and expenses incurred is rupees 7,000, so the profit here is rupees 3,000. So here, income minus expenses, you get profit. The next term is loss. When expenses are greater than revenue, the business suffers a loss. The next term here is drawings. When the owner withdraws money or goods for personal use, it is called drawings. The next term is stock. Stock means unsold goods remaining in the business. The next term is cash. Cash is the most liquid asset of a business. It includes money available in hand and can be used immediately for payments. Next, bank. Money deposited in a bank account for business purposes is called bank balance in accounting. The next term is discount. A discount is the reduction in the price of goods or services. If a product costs rupees 1000 and you get rupees 100 off, the discount is rupees 100. The next term is invoice. An invoice is a document issued by the seller to the buyer showing details of goods sold, quantity, price, and amount payable. And the last term is outstanding expense. Outstanding expenses They are the expenses which are incurred but not yet paid. Example, salary for June is due, but it will be paid next month. So here, the simple trick to remember is, did the expense incur? Yes. Was a payment made? No. Then it is an outstanding expense. Out of these 20 terms, which one was completely new to you? Let me know in the comments. If this video helped you to understand the accounting terms, don't forget to like, share and subscribe to Commerce Made Easy by Jennifer.